Here's a summary of the Starbucks fourth quarter fiscal year 2025 earnings call, focusing on key financial metrics, management's outlook, risks, highlights, and lowlights, ideal for reading aloud. Begin reading. Good afternoon, everyone. Today, we'll review Starbucks' fourth quarter fiscal year 2025 results, led by Chairman and CEO Brian Niccol and CFO Kathy Smith. Overall performance and key financial metrics. Starbucks finished fiscal year 2025 strong. In the fourth quarter, global revenue grew by 5% year-over-year, reaching $9.6 billion. This was supported by global comparable store sales growth of 1%, marking the company's first positive comp quarter in 7 quarters. North America saw a significant improvement, with company-operated comparable store sales flat year-over-year. This was driven by flat U.S. company-operated comps and positive growth in Canada. Transaction comps continued to improve sequentially across both markets. Notably, U.S. company-operated sales comps turned positive in September and have remained so through October, indicating growing momentum. The international segment demonstrated resilience with 3% comparable store sales growth, led by strong performance in key markets like Japan, which returned to positive comps, as well as China, the UK, and Mexico. International revenue reached a record $2.1 billion in the quarter and $7.8 billion for the full fiscal year. Earnings per share, EPS, for the fourth quarter was 52 cents, reflecting ongoing investments in the Back to Starbucks strategy. While earnings are expected to follow top-line growth, the company is focused on strengthening its foundation first. Management's forecasts and future outlook. Looking ahead, Starbucks is building on the momentum from fiscal year 2025. For fiscal year 2026, the company is focused on executing with excellence and driving growth through innovation. The holiday season is anticipated to be iconic, bringing together warmer coffee houses, better staffing, improved order sequencing, a relevant menu, engaging marketing, and new merchandise. The company aims to become the world's best customer service company. This involves doubling down on the Green Apron Service standard, scaling the assistant store manager role, and simplifying store-level reporting to just 5 key performance indicators. Menu innovation will continue, with plans to introduce an up-level bake case featuring new artisanal bakery products and optimizing the matcha menu. Supply chain improvements are also underway to support innovation and inventory availability. Further enhancements to the rewards program and mobile app, along with new brand activations, are expected through 2026. Management is committed to disciplined capital deployment, with efforts to reduce build costs and improve the profitability of new coffee houses. While the full financial outlook for fiscal 2026 and beyond will be provided at the Investor Day in late January, the company expects U.S. company-operated comps to build through the year. Significant risk factors, inflation, coffee prices, and tariffs remain dynamic and are expected to be a headwind, particularly for coffee costs through the first half of fiscal 2026. Turnaround uncertainty. Management acknowledges that turnarounds are difficult to forecast and that recoveries are not always linear. Macroeconomic pressures. While not explicitly detailed as a major risk, the company acknowledges the need to deliver a great experience to younger consumers who may be more selective with their spending. Competition. The increasing competition from emerging beverage brands is a factor that the company is addressing by focusing on its core strengths. Highlights. First, positive global comparable store sales in 7 quarters. U.S. company-operated sales comps turned positive in September and remained positive through October. Successful rollout of the Green Apron Service standard, leading to improved customer experience scores, record low hourly partner turnover, and stronger partner engagement. Significant improvements in transaction comps sequentially. Strong international performance, with record revenues and positive comps in key markets. Introduction of new menu items like protein cold foam and protein lattes, which are performing well and driving incremental visits from less frequent customers. Strengthened value perception across all generations, driven by service improvements and pricing architecture adjustments. Accelerated brand affinity scores, and a 5-year record high for Starbucks as customers' first choice. Significant interest from potential partners for Starbucks China, with plans to retain a meaningful stake. Strategic closure of underperforming stores to create a healthier portfolio. Lowlights. Q4 EPS was down 34% year-over-year, reflecting investments in the turnaround strategy. Consolidated operating margin contracted by 500 basis points due to inflation and investments in labor hours. U.S. licensed store portfolio revenue declined in Q4, mainly due to trends in grocery and retail channels. Net store closures globally in the fourth quarter as part of portfolio restructuring. Most important statements from the CEO and CFO. Brian Niccol, Chairman and CEO. A year ago, we launched our Back to Starbucks strategy to get us back to the exceptional craft, connection, and welcoming coffee houses that define the Starbucks experience and set us apart. Since then, we've been focused on executing our plan and accelerating it where we've seen opportunity. It's clear from our results that our plan is working, and our turnaround is taking hold. We finished the fiscal year strong with 5% global revenue growth and global comparable store sales growth of 1% in the fourth quarter, making it our first positive quarter in 7 quarters. Our U.S. company-operated sales comp turned positive in September, driven by transactions, and it's remained positive through October, reflecting the momentum taking shape in our business. We set a plan, we're working the plan, and the plan is working. We have more work to do, but we're building momentum. Regardless of the headwinds and tailwinds we may encounter, I'm confident we have the right team and strategy to deliver long-term sustainable growth. Back to Starbucks is not just a slogan. It represents a lasting growth model that is fundamentally focused on our customers and will be supported by our partners in the stores, catering to every way people want to experience Starbucks. Kathy Smith, Executive Vice President and Chief Financial Officer. Our Q4 consolidated revenue was $9.6 billion, up 5% to the prior year, reflecting 2% net new company-operated store growth and a 1% increase in global comparable store sales, driven by international outperformance, positive comps in Canada, and continued progress in our U.S. business. Our Q4 consolidated operating margin was 9.4%, contracting 500 basis points from the prior year. This was primarily driven by inflation, led by coffee prices and tariffs, as well as investments in support of Back to Starbucks, largely in labor hours. Turnarounds are difficult to forecast. And while we have good reason to believe that our U.S. company-operated comps should build through the year, we also know that recoveries are not always linear. We remain disciplined on costs as we focus on allocating our resources to our Back to Starbucks priorities. As we continue to grow, our goal is that every transaction is higher quality and more profitable. We're on a multi-year turnaround. Q4 was a turning point, having delivered the first quarter of global comp growth in 7 quarters, and we're encouraged by our trends to date in Q1. End reading.